Thanks, Kevin, and good morning, everyone. While the panel gets wired, again, it's all about IT these days, and take their seats, I thought I'd just give you a little overview of what we're trying to do. This first panel of the conference usually deals with kind of what's going on in MedTech venture. It's had a variety of names. Last year, we tried to focus on the early stage funding gap, and I think today, I think we're going to focus on just what's going on overall. Obviously, there's a food chain here, and one of the bigger issues, I think, in the industry is the fact that the limited partners, the investors in venture funds, are having second thoughts about venture capital in general as an asset class, and more specifically, healthcare, and then within healthcare, MedTech. So no matter where you are, the crosshairs are on MedTech right now. So I thought, let's focus on that. We have a great panel today. These are the investors who are on the front lines, who are busy. On that slide you saw the active investors for 2011. These four investors represent a good deal of that activity. So we're fortunate to have them today. As Kevin mentioned, I have left 3Arch since the last conference, and setting off with a new fund with a completely new model called Osage University Partners, looking at partnering with universities and capturing ongoing investment capabilities with university spinouts. I think as you look at the decreasing R&D dollars being spent in corporate America, universities are where most of the discoveries are now occurring, and with the universities starting to realize that although their primary mission is research and education, there's a growing desire to try to commercialize some of those discoveries. And many of the universities have reinvigorated a broader tech transfer operation. I was over at the University of Minnesota yesterday at their venture forum and was amazed at the quality of the companies that they're spinning out and how robust a program they have to try to foster innovation and move these discoveries from the bench to the public good. And it's across all areas, not just healthcare, but very impressive effort. For those of you in the community, you probably know that already. But at Osage, we've partnered with 48 of the leading universities in the country and have looked at and made investments both on the physical science and life science side. So it's a startup, it's a new fund, we just closed it, and all these years I've been telling entrepreneurs to go out and follow your passion, and I figured it was time to put my money where my mouth is, so to speak. So that's been exciting. So what I thought I'd do, as opposed to giving you detailed intros to the panelists, the bios are published, they're on the website, and they're in the materials. But what I do is just ask each of them to give you a quick intro to kind of their fund and where they are, what they're looking at, and how they're dealing with the current changes in the landscape. So I'm going to try to move this a little bit so you guys over there can see a little better. There, John, if you want to pull up. So to my left is John Ryan from Onset Ventures, Lisa Suennen from Psilos, Juliet Bakker from Longitude Capital, and Mike Carusi from Advanced Technology Ventures. So John, if you want to just start, given you're the closest, although we'd like to do ladies first, if you could just give folks a little introduction to your fund and kind of what you guys are up to these days.
I can't believe we started off by you calling me a lady.
Nobody needs to know.
Yeah, so sure. Onset Ventures has been around for about 28 years. Onset has always invested in both information technology and medical technology companies. Generally around 50%, 40 or 50% medical, but it depends on the number of deals that we find that we like in any sector in terms of the split. Onset is well known for its early stage investing. So traditionally about 70% of Onset's investments are in seed or Series A companies. The other 30% are opportunistic investments at any stage, and mid or late stage. At Onset, we focus on something we call venture craftsmanship, and that means that unlike some other early stage investors, rather than sprinkling a lot of investments around, we try to do a fewer number of good, high quality early stage investments, and then we try to help those companies along as much as we possibly can. Really at the board level, we don't get involved in day-to-day management, but from a board level, we try to help make those companies successful as much as possible. Within the medical area, we do primarily medical devices. We'll also do some drug delivery and diagnostics that are device-y in nature. We don't do drug development biotech type companies. We've got 3 partners, myself, Leslie Bottorff, and Rob Cooling. And we are very optimistic about the future of healthcare. But I guess we can talk about that a little bit more in a few minutes.
Hi everyone, I'm Lisa Suennen. I'm a partner with Psilos Group, and we're about a 14-year-old fund. We invest broadly in MedTech and healthcare IT and healthcare services. We tend to invest pretty late stage in companies with 5 to 10 million in revenue and take pretty big stakes in the companies, get very actively involved. Our focus across all these sectors, including MedTech, is to find companies that have figured out ways of improving quality and reducing costs, with a significant focus on reducing costs, reducing inflation in the healthcare system, and aligning the financial incentives of patients, payers, and providers. So we take a very healthcare economics approach to what we do. And we're located in California and New York. We have 5 partners focused on this area. We probably have about 45% of our total capital under management in the MedTech sector.
So I'm Juliet Bakker, and I'm a co-founder of Longitude Capital. So our team actually founded the healthcare practice at Pequot Capital in '97. And Pequot Capital was a large asset management firm. And then the practice there was combined tech and healthcare. So we've seen what it's like to live in a practice that has combined technology and healthcare practices. In 2006, our team left Pequot and formed Longitude Capital. We were really very focused on having a healthcare-only fund, so we raised our first fund, which was a $325 million fund. That fund is now almost fully invested, and we've already raised and closed our second fund. And we focus exclusively on devices and biotech. We've always had an intention of allocating the capital about 50-50, and that's also how our human capital is deployed, and we have some very specific reasons for that allocation that we can discuss a little later. In terms of medical devices, historically we've been stage agnostic, so we are willing to invest at any stage of a company's development. We've led a number of Series A investments in companies that you know, and we invest also in later stage companies. And the thinking is really that we don't want to do exclusively early stage, because one of the prime tenets of our fund and one of the promises we make to our LPs is that a key investment objective is to return capital from any given investment within 3 to 5 years. So if you have a whole portfolio of only early stage companies, whether they're device or biotech, that's unlikely to happen. And so in parallel, on the biotech side, we invest exclusively in later stage companies, in companies that have drug assets that are very well characterized. We have offices in Greenwich, Connecticut and Menlo Park, and we have 6 managing directors and a number of other investment staff, so we total about 10 at this point.
And I'm Mike Carusi, general partner with ATV, and we too are a balanced fund, so healthcare and IT, as well as clean tech. Healthcare is about 50% of what we do, and then within healthcare it's about 50% devices, 50% biotech. We are by and large early stage. About 3/4 of what we do is Series A, Series B, early stage investments. And then within that piece, we are actually remaining very focused on therapeutics, even devices that have a therapeutic feature or orientation, and very much focused on the innovation side of the house. So, within devices what we're looking for is what we've termed devices that are playing in billion-dollar drug markets. So we're really looking at devices that may compete with drugs, that may play in drugs of that size. I think probably 2 good examples are Ardian that we were involved with, that was in the hypertension space, GI Dynamics, it's in the diabetes space.